The purpose of this video is to show you how to work with the default overrides when working with a borrower. So the first thing you're going to want to do is make sure that you're on the Add Buyer section and you're in the Additional Consumer Information screen. Towards the bottom, you're going to see a little button that says click this button to override the default values. When you click that, you bring up another page that will show up on the, when you click Continue Next, it's going to bring you to an override section. So the purpose of this section is when you have a borrower whose situation is different from your typical borrower. Let's say 9 out of 10 of your borrowers would have 4% for on a conventional 20% down today, but this particular borrower, because of credit score, qualifies for 4.5%, or maybe because they want a no closing cost type loan, whatever it might be. So you can put in 4.5%. That will change it for this borrower, but this borrower only. We do this because then you don't, if you ever have to change rates, you change it for the 9 out of 10 all at once, and then you only have to alter 1 or 2 different borrowers if you have any overrides going on. It might be times where there's 0 overrides and all you have to do is just change it on the first page. It's very, very simple to do. You could also override insurance. Maybe you expect their insurance to be higher because of the poor credit. Now I just want to remind you that you can do a flat dollar amount, an annual dollar amount, or a percentage of the purchase price. I like the flat dollar amount myself. Maybe their monthly MI is going to be higher too. Instead of, let's say, a 0.62 factor, this one's going to be 0.89. Can do that. Or if there were upfront mortgage insurance, you could change that. This is also how you might put in mortgage insurance if you were doing a split premium where there was a partial upfront and a partial premium. Those get kind of complicated when it comes to the amounts, and you would just override the upfront and the monthly in this section, put it to whatever this particular borrower was going to use, and then choose the corresponding thing on the previous screen in terms of upfront and monthly, and that's how you would handle that structure. So that is how you use default overrides on a per borrower basis to adjust for differences in borrowers when you've got someone who falls outside of the typical. That's it for this video. Thanks for watching my pre-approval notice help videos.